and you see this cat is sitting here asking for money, but reality, that's the Bitcoin spot ETF that everyone's waiting for. SEC turns around and looks at you, but then ignores you. But everybody is extremely hungry. What do you think is going to happen when the SEC gives in and puts money in that bowl? Everybody's going to dive in and buy Bitcoin. What's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. We have another jam-packed video today where we're getting straight into it, getting into the charts. What do we see? What do we anticipate? Taking a look at the Bitcoin versus the US dollar on the monthly chart. Once again, each one of these candles represents 1 month. So we've showed you this 5-wave Elliott wave sequence. The first leg, second leg, the third leg, this is that $65,000 top. The fourth leg, this pullback, this was an irregular pullback, ABC correction, where the B leg actually went up higher and faked everybody out than this the top of this third leg, and then had to pull back on the 15.6K, and then we're getting ready to ramp up for that fifth leg. How high can this fifth leg go? Time will definitely tell, but look at this Gaussian channel. That's what we want you to pay attention to, because this Gaussian channel can let you know what's to come. Now, if we see certain things happen, this could be bearish for Bitcoin. Now, are we out the woods yet with this pullback? Bitcoin bros think so. Could we be wrong? It's a possibility, because this could be the fourth leg pullback here, and then this fifth leg could be right here. This is another alternative to play out, and then this could be an ABC correction where we're coming down to even lower price action. Could we see that? Could we go to the bottom of this Gaussian channel? That is in the realm of possibility. This could be the bottom, or we could be getting some type of ABC correction. And the Bitcoin bros can show you that this is how this would look. We would have this A, B, C correction to lower price action. Now, are we going to go that low? That's not guaranteed, but you have to wait and see, because we're not out the woods just yet. Why do we say this? Because we came down and retested this midline of the Gaussian channel. We came back up and retested the top of this Gaussian channel once, twice, and now we're getting sort of rejected. If we zoom into this price action, take a little bit closer, we're actually below the 20 moving average. This orange line, this is the 20 moving average on the monthly. So this is a very strong support and or resistance level, depending on how the price action is respecting it. Now, looking back in the previous bear cycle, when Bitcoin went to 20,000, we came down and then wicked down to this, but didn't really get too much pullback, because we didn't even get really into the Gaussian channels as far as the candle bodies go. Taking a look at the 2-week chart, what do we see? What do we anticipate? The 2-week chart has came up, and the Gaussian channel seems to be already playing out, and we're already getting back in this. So this is looking pretty bullish, because look, we fell off a cliff. We actually flipped from green to red, and now we're stair-stepping our way back up, but in the Gaussian channel. This is bullish. This is bullish because we've hit the midline of the Gaussian channel and are currently, looks like we're trying to backtest that 20 moving average. We'll see what the 2-week chart does. If we come back up and get back above this, this could flip from red to green, and then we'll see more higher price action. So this looks a little bullish on the 2-week, but on the monthly, once again, we have to pay attention, because we're not out the woods just quite yet. But the Bitcoin bros do prescribe that the bottom is in right here, that 15.6K, and we're just going to be trading in a range up until the next halving cycle, which is next year, April of 2024. And with that, let's hear from Jeff Booth. If you guys don't know who Jeff Booth is, he's an entrepreneur, author of The Price of Tomorrow. You can check the book out here. But let's hear what Jeff has to say with what's going on in the economy and what his thoughts are. Let's hear from Jeff.
I think we're in for a rocky road ahead, no matter what, and rocky might be an understatement. And depending where you are in the world, it might seem safe for some time.
Right.
But overall, economies are in a lot of trouble, and that means, and because the economies are in a lot of trouble, that means division and hatred is probably going to reign, and political upheaval is inevitable as well. So ultimately, that comes from approximately $400 trillion of debt already being insolvent. Well, if you paid back $1 trillion of debt, it would take you approximately 32,000 years to pay back $1 trillion of debt. So when you have 400 trillion in the global economy that's already insolvent, that kind of is a big problem. I think we need to be careful specifically about, is deflation good for this current economic problem? Because deflation would make this current economic problem worse. So when people tell you deflation is required for a productive economy, just ask yourself this: why is theft in money required to trade with each other? So we believe we live in democracies, yet we have no vote for the thing that matters most in our life, in our money losing value over time. Why is that? And we've been taught through all schools, don't even ask what money is. Economics starts a layer above there, assuming that inflation is required. But ask yourself, why is that? Now, I will grant, if you have a credit-based system, so if you have nothing backing a system, if money is only an instrument, a credit instrument, then inflation is required. Because without inflation, then the credit resets as deflation is allowed, it happens in the economy. Or let's say, instead of as deflation happens, as the natural free market emerges, which creates deflation and product prices coming down, then you can't pay the debt gets more expensive in real terms. So the only way to run an inflationary, a credit-based system is the market has always been deflationary, and if you run inflation against that, the rise of debt is in fact short-term debt cycles. As debt fails at a certain kind of in the economy or people, and then it gets kicked up the road, because when people fail, government steps in and either saves those people, puts them on welfare, or so government steps in and creates more debt, or saves banks, bails out banks, and kicks it upstairs. And so once the government is in highly in debt, what they typically do is increase the inflation rate to get out of debt, because it's a hidden theft in money.
Right. Yep.
That transfers more and more purchasing power to the biggest companies and government. Government gets bigger as a result, and it hurts small business, and it hurts individual people. Yeah, middle class. So it's a hidden theft, a transfer of money from
poor to rich.
From poor to rich, which is crazy, and it happens all over the world. They are left with very little choice. And that's why I would say most people think about it as a conspiracy theory. And by thinking of it as conspiracy theory, they actually make it worse, because most people don't know what we're talking about. And the people yelling at this kind of system as a conspiracy theory, which there are some really not good people in the system, but most of them it's just run because the incentives are there. And those people would tell themselves a story that I have to do this, because if I don't, then people are going to starve, or the entire economy is going to fail. And actually, they're right in that, because if you let deflation happen from $400 trillion of debt all over the world, it just keeps on unwinding. What I mean by that is everything that you take for granted right now, or most things you take for granted right now, are tied to that credit-based system. So supply chains would fail, food on shelves would fail, all businesses would go broke, banks would go broke, because there's actually no money backing it. It's just a contract that says, oh, this person has this money because they're IOUs all the way down. And those IOUs would, if they became more expensive in real terms as you allowed deflation to happen, it would fail.